So again, if you put yourself back in 2015, there were no, really financial apps at that time. Even banks did not have mobile apps, right? It was all, whatever banking was there was on the desktop. So you needed a set of customers who are willing to experiment and try. It's common. I mean, it's commonly said that you can get a loan when you don't need it, right? So that's the problem that is genuinely there, and that's the problem we are trying to solve, right? We want to give approach that I take even today, right? I mean, don't try to be too scientific about things. You only be as scientific as is required, right? So don't get lost in metrics. Sometimes you lose the big picture otherwise. By doing this, we figured out a lot of what are called alternate data points, right? So you look at online footprint beyond lending, right? So where are people spending their money so that they are able to earn more income, because ultimately credit is only a temporary solution. It is money that you have to pay back. But if you are able to upskill yourself and get a better job that pays you more money, that is permanent improvement in your financial well-being.
In today's episode, we are joined by Gaurav Jalan, founder and CEO of mPokket, one of India's leading digital lending platforms, empowering India's young people with instant hassle free credit. With a background in finance from Amherst College and Columbia Business School, Gaurav leveraged his deep expertise in fintech and investments to solve this problem for students and young professionals. Under his leadership, mPokket has disbursed over 16,000 crores in loans and served more than 2 crore users while building a financial ecosystem that extends beyond lending into career acceleration and financial literacy. Now, with 30 million plus app downloads, mPocket is redefining financial access for India's next generation. Join us as we explore Gaurav's journey of building a category defining company in India. Gaurav, welcome to Founders Unfiltered.
Thank you, Aviral, for having me.
So, Gaurav, we'll start with the rapid fire. What's a financial habit that you think young Indians should adopt very early on?
I think planning for the future. So just thinking about what what they want, what their expenses are going to look like, what your income is going to look like. The traditional thing that our parents kind of taught us, right? I know that times are changing, and there's more of an emphasis on consumption, which is absolutely fine. But at the same time, I think being aware of how you're going to meet your needs and requirements and just planning accordingly is very critical. So that's something I think all young Indians need to be aware of.
If you weren't building mPocket, what sector would you be working in?
If I wasn't building mPocket, I would probably be an investor, which is what I was doing before I started mPocket, right? So I probably would go back to that profession. That's the other thing that I know very well and love.
And why?
I think I love the fact that you can, it's a very good learning journey because you're looking at so many different opportunities, companies, people trying to understand what the world is going to look like, for those companies and overall over the next few years. So it's very interesting. It's a forward-looking kind of profession, and I think the other thing is, frankly, the psychology behind investing. I find very interesting, especially when it comes to public markets, right, where um, momentum can play a very big role, and crowd psychology is a very important aspect, and kind of thinking through that and making intelligent decisions, I think, is something that I really enjoyed when I was in that field.
What do you think is one finance topic that should be taught in colleges?
Again, coming back to the same topic that I was talking about, I think investing, right? So how do you, when you have a certain amount of surplus capital, what do you do with it? I think people really struggle, and it's not something that people really think systematically about. um, Mostly people's decisions are driven by what their peers or friends or families are doing, and it's usually heavily influenced by a few individuals or what is popular at the time. uh, and I think if that is systematically taught to people, I think it would be of great value to society as a whole.
Interesting.
Um, Business school versus your time in consulting, which experience do you think shaped you more?
I think business school was a great foundational place, in the sense it was Um, One is you meet a very eclectic kind of group of people who are all very ambitious, right? And the way business school curriculums are typically designed, they throw a lot at you at the same time. So I think it teaches you to multitask, and and it teaches you how to work with people, because a lot of business school is about working in groups, doing projects, etc. So I think in that sense, business school prepares you very well for for corporate life. In terms of content, I think that's secondary. Very frankly, I think it's more about the experience. Time in consulting was actually, I mean, I that was my first corporate experience, right? So moving from student life to corporate life, and I think it was I think for me that was very again foundational in terms of a lot of the principles that I learned about how to approach a problem, structured thinking, analytical approach to any any problem or any task that is there. How do you break it down into logical parts? How do you go after each, solve it, and then eventually how helps you solve a complete problem. And also just how you need to work with people, right? A lot of consulting is you're working with other companies, right? So you're working with clients, so building relationships. Because a lot of work is about working with people. It's not something that's there on a spreadsheet or a document. It's about working with people to get things done, because you might solve something on paper, doesn't mean it's going to actually eventually translate into impact. So I think in uh, that's something you learn in consulting. So I think, I mean, can't compare, both very different, and both were very valuable to me.
And finally, what's one truth that you deeply believe in, which few people agree with you on?
What I've learned over time, and I put into practice, is trying not to aim for perfection, right? And I think this is a topic on which you'll find very divergent views, right? A lot of people talk about being the absolute best, um, doing everything perfectly, but I think some perfection can be the enemy of speed, right? So I think what I have practiced is, and this is something, again, coming back to, you asked me the question about consulting, you learn the 80/20 rule, right? And I think that actually serves you very well in almost any situation, right? Where you try and figure out where you need to get to, and after that returns kind of diminish a little bit. So this really helps you allocate your time better, because then that 20% of time, instead of spending it on something you've already solved, most for the most part, you can do different things with it. And I think eventually the biggest constraint that all of us have is time, right? Because you only have so many hours in a day. um, and if you use that time efficiently, you can do more and do better.
Understand. No, I think that's a great answer, and maybe ties in probably well with your journey. So you moved abroad to study very early on, and this is many years ago. So it must have been, I'd say, slightly unique. Talk us through where you grew up, how you ended up moving abroad for your undergraduate as well as business school, and then coming back to India to build out mPokket. What was the journey like? What were those decision points that made you take those calls?
Yeah, you're taking me back a long way, but
Hmm.
it's good to get nostalgic once in a while, right? So I'm a Calcutta guy, right? I grew up in the city of Kolkata. I went out for a few years to boarding school, but then came back, did my 11 class 11 and 12 here. And I think somewhere along the way, I was always, I was always good in studies, academically, scored well, etc. Went the science route, right? So class 11, 12. I mean, the typical route then was, IITs were, the logical step. And but for me, I kind of decided, I guess somewhere when in 10th or 11th grade, right? I said, I really wanted to step out, right, and learn more about the world and experience something different, right? So my driving force, and somewhere along the way, I came across the education system in the US, which is liberal arts driven, And at that time, this wasn't really a concept that was even there in India, right? So I found the entire concept of exploring different things and then deciding one area to focus on while being able to also have a diverse experience very, very interesting. Plus, I wanted to, as I said, step out of my comfort zone, go experience a different, culture, people, etc. So kind of made up my mind that I want to go that route. um, I came from a regular family. I mean, education, it's today, even today, it's expensive. Going outside India, especially to the US to study, it was the same at that time. So I had to figure out how to, fund most of my education. So looking for scholarships, etc. Wasn't easy in those days. The internet had just come about. I'm talking about, 1997 is when I went to the US. So started applying in 96, right, and preparing, starting 95 onward. So it was an interesting journey. I got into a eventually ended up getting into a college, not my top choices. I mean, the regular top choices at that point when you're going is, okay, I want to get into Harvard, Stanford, one of these top Ivies. um, I couldn't make it to one of those, but then I got into a college called Franklin and Marshall. They gave me a good scholarship, went there, started my education in the US, absolutely loved it. It was kind of everything I expected. um, and then after 2 years, I transferred to another college called Amherst College because I wanted to pursue computer science, and my initial college didn't have it. So went there in 2001. I graduated from Amherst, which was and even today it's one of the top liberal arts colleges in the US. After I graduated from Amherst, I went into consulting, right? So that's joined a company called Bain and Company. Started, went to New York, joined their office in New York, started working there. Um, Very interesting experience. My first day of work was September 10th, 2001. The second day, September 11th, happened, and my office was in Times Square in New York. I literally saw the second plane hit the towers. It's kind of, you don't really know what's happening at that time. You've just gone into the corporate world, and suddenly, it's very different. Thankfully, I was able to keep my job, right, amidst a lot of layoffs, right, and stayed on at Bain for about the next 3.5 years. And then I decided that, look, consulting was great. I think, as I was saying, I learned a lot there. A lot of my current, you know, thought process, my foundational skills in terms of, how to think analytically, how to be very data driven, how to kind of think structurally about problems, how to solve them, how to work with people. A lot of them I learned in those years at Bain. Uh, but then I decided that I didn't want to be a consultant for life, right? So during that time, I started investing in the stock markets, right, and found it incredibly interesting. As I was saying, I just found the concept of an asset being out there, its price being so volatile, trying to understand what's going on, why, just the entire psychology of it was very, very intriguing to me. And I decided that I wanted to move into that career, essentially into investing. And I believed that I needed kind of a transition to get there. So I decided to get an MBA. So went to Columbia Business School, got an MBA from there, and after that I actually moved back to India. So by then I'd spent about a decade in the US, and I was able to get an opportunity to join Fidelity, which is one of the largest mutual fund companies in the world. They had just opened an office in India a few years ago at that time. So I'm talking about 2006. And I got a job opportunity with them. So I kind of made a decision to come back to India, which was slightly unique at that point because mostly you've spent an enormous amount of money. I'd taken a loan to do my MBA. I still had loans from my undergrad, which I was paying off. So you're not really savings heavy at that point. And, logically, uh, I turned down a job offer from one of the top investment banks then in New York, which I also had. And financially, that was the logical thing to do. But then, I've never been a very conventional, person in that sense. I try to think long term. I have a certain vision and I follow it. So I really wanted to get into investing, and I said, look, if I figure out how to do things well, I'll make up for the financial aspect can be made up, right? You don't need to think about the next 1 year necessarily. So uh, took that decision, uh, moved back to India. Also, I mean, again, moving to India was, I could have again stayed in the US and pursued investing, right? The reason to move to India was, again, at that time, as I said, I'd spent about a decade in the US. I really wanted to go to the US after school, but then by that time I felt like, whatever the reason that I had moved there, I had kind of fulfilled that, in the sense that I had immersed myself in a new culture, learned a ton, come out very strong, and I never saw myself kind of growing old in the US, right? India was my country. I wanted to come back here. Also, I thought opportunity in India, was very big. The country was going to do well. So I wanted to come back to India and do something here, right? So that was my driving force. Also, family, was in India. So again, all of those factors drove me to come back to India. And then I came back. I spent about half a decade at Fidelity. At that time, again, covering public markets. Again, interesting journey. I joined in kind of late 2006, and then 2008, like after literally a couple of years, you had the financial crisis that happened, right? So pretty early, again, a bit of a shock moving into my next corporate job, right? But thankfully, again, I managed to keep my job somehow, right? Went through that journey. I mean, these are tremendous learning experiences when you go through these kinds of ups and downs, right? Because it's unique, it's not the usual, and I think that's what helps you build knowledge, build character, and actually build very kind of deep experiences with unique insights, right? So I think went through that, and then eventually I always knew I wanted to be an entrepreneur, right? I'm a Marwadi, and I always saw businessmen in my family. We have a family business. Even though I never wanted to join my family business, but I knew that eventually I always wanted to be an entrepreneur, right? So left Fidelity and started my entrepreneurial journey in the investing space. So, got a license to manage money at that time, portfolio management license, put together capital from some high net worth individuals, and, started that journey, investing money in the public markets, which is what I knew how to do. So, I mean, that was an interesting journey. Again, the work was similar to what I was doing at Fidelity, but then you're doing it on your own, kind of have to create your own setup. There's no institutional support, and you're actually handling now and responsible directly for people's money. So, that was interesting. But I think, what I realized after some time was, while I really enjoyed the investing experience, um, if you want to really build something of scale, uh, and you've started a VC fund, maybe you've kind of realized this by now. There are two aspects, right? One is the actual investing, the other is the asset gathering, right? Which the two can often be disjointed. Just because you're a great investor and you generate good returns doesn't mean the assets will come to you. That's a different aspect of work. And frankly, I introspected and realized that that's not something that I was really skilled at, and I didn't want to spend a disproportionate amount of my time doing that. So started looking for other ideas, other ways to capitalize on the growth opportunity that was there in India, um, and eventually I ended up starting mPokket. The genesis of mPokket was um, trying to solve a problem that could impact a very large number of people, right? That was the genesis. And kind of looking around me at that time in 2015, smartphone penetration was growing very rapidly, right? So that was a trend that I, like maybe many other people, realized that was going to really open up a lot of opportunities, because effectively you're opening up a completely new distribution channel to reach customers that did not previously exist, right? And this is going to open up the opportunity to create many businesses because of the economics of that distribution channel, right? If you want to run an offline business, make it pan India, you need to literally go to every state, city, set up branches, create very large teams. Now this was very different, right? You're basically having access to everybody because they now have a smartphone in their pocket, right? So obviously it's very going to, as I said, open up a lot of new different business opportunities that previously were difficult to do. um, so that was one trend that I wanted to capitalize on, that coupled with um, the lack of credit access, which is still there in India, but back in 2015, it was much, much more apparent. And the immediate problem that I saw was, that when I went to the US as a student, as a college student, even as an international student who didn't have a credit history there in the US, as somebody who's just 18 years old, I was able to get a credit card, right, with a relatively small limit, but I was able to get a credit card. And that really helped me manage my finances, right? When you're short of money, as I said, I was on a scholarship, kind of working on campus to kind of, meet my expenses. And having that credit card sometimes to meet emergency expenses really helped me. And, when I came back to India, I mean, you see that students in India, I mean, there is no, if you're a college student in India, how do you meet an emergency expense if you have something, right? I mean, other than asking your friends or asking your parents for more money, there was nothing to do, right? So overall, I thought credit was a very big opportunity, and I wanted to start with a problem that I really understood, and that was kind of close to me. And I didn't see a reason why, if a student can be credit worthy in the US or other developed markets, why can that same student not be credit worthy in India, right? So that's where I started. And also, what helped was students tend to be more digitally savvy. They tend to be more adoptive and open to new technologies. So again, if you put yourself back in 2015, there were no, really financial apps at that time. Even banks did not have mobile apps, right? It was all, whatever banking was there was on the desktop. So you needed a set of customers who are willing to experiment and try, right? So that's where we started an mPokket, our journey, providing very small amounts of money, literally 500 rupees to college students as credit. Um, and then from there, we've kind of made the journey to where we are today, which is a much larger platform that is serving a very wide variety of customers, of whom college students is one part, but then, the bigger part now is, salaried professionals, gig workers, self-employed people. The common denominator being that these are all people who, in general, would not have access to the formal financial system for credit, um, either because they do not have a very good credit, they've not been able to build up a good credit history. So a lot of them might be new to credit. They may not, their credit scores may not be very high at this point. Their income levels may not be very high. Again, even though India has a population of 150 crore people, we have less than 10 crore credit cards in the country, right? So, and the unique number of individuals who would have credit cards is maybe 5-6 crores, right? So, what do the other people do? I mean, how many people can go to a bank and get a loan very easily when they want it, right? It's common. I mean, it's commonly said that, you can get a loan when you don't need it, right? So that's the problem that is genuinely there, and that's the problem we are trying to solve, right? We want to provide access to credit to people who actually need it and to whom it has a lot of value. um, so we set about, providing credit at scale, right? How do you serve literally millions of customers across the country? And it's not a trivial problem, because again, to build a business, it has to be sustainable, right? So you have to make the unit economics work. You have to ensure, in this case, in lending, what's most important is that you get your money back. So you have to ensure that, while you are providing access where required, you also have to make sure there is an intent and there is an ability on the part of the customer to pay the money back. And at a portfolio level, you can ensure that the losses are controlled. So, um, we've kind of built a lot of muscle in that space over the last 8 years that we have been doing this. And at this point, again, given out loans to a few crore people, given out, loans across multiple cycles. We went through COVID, etc. We've seen different types of behavior. We are pan India. Our customers are in more than 19,000 pin codes. And again, we give as little as 500, 1,000 rupees as credit. So we've really, I think, over time built that expertise.
Want to touch a bit about how you got to that scale, right? I mean, from starting off to, you know, college students and giving out, loans at a smaller scale. How did you build up and cover such a large um, user base? What were some of the kind of key learnings along the way?
So I think in any business, right? I mean, the first thing you want to see is that, whether what you are doing uh, has basic, as they say, product market fit, right? I mean, because you may have an idea, but sometimes, the idea may make sense to you, but when you go out in the market, you might find that customers either don't really care for it. I mean, they don't really need the product as much. They're not willing to pay for it, for example, or maybe the costs of providing it are prohibitive, and therefore the business doesn't make sense. So there are a lot of things that can not work. But in this particular case, thankfully, the thesis that I had going in, I think in the early days we realized that that basic product market fit was there, right? And some of the basic data points that you look at in order to establish this were, our customers actually coming and using the product, right? So we saw that, okay, yeah, I mean, you've gone live with something, your customers are coming, they're searching for the product, they're actually using it, right? So they're actually borrowing money. um, then, I mean, again, as I said, in lending, critical part is the money coming back, because you're lending the money, but if they're just kind of taking it and going away, that doesn't really help. So I think you know that was a big uncertainty, because frankly no one had done something like this before. And you know if I were to take a poll, and I did, obviously, when you're doing something like this, you ask people, right, what they think, people who are close to your friends, people, colleagues, ex-colleagues, even you talk to potential investors, etc. They all give you feedback. The general feedback I had was, don't even try this, it will have at least a 50% default rate, right? But I didn't, obviously I didn't think that way, otherwise I wouldn't have even started the business, because my belief was that inherently people are not dishonest, right? And why should half the people choose not to pay back the money, unless I'm giving money to the wrong people, right? So so obviously I had to avoid adverse selection. And when we went in again, as I saw that the money was coming back, right, the default rates were reasonable. Obviously, we optimized them over time, but they were still reasonable even in the early days. Very importantly, another two things were, I saw repeat usage, right, which is what you want. You want customers who, they've used you once, they borrowed, they paid back, and then they came back subsequently at some point. That's great, because that means they actually found a lot of value in what you're doing, right? Otherwise, why would they come back to you? And we started seeing a lot of referrals. So people started, telling their friends about it, and we saw that a lot of customers were coming to us from referrals. So again, these are some of the basic signs that gave us confidence that, okay, we're on the right path, right?
And were these metrics like targets that you were trying to actively optimize, or was it more just the byproduct of
Very frankly, in the very early days of business, I think you don't have the luxury of setting kind of you don't have the luxury of setting very specific targets, because you're effectively operating among a very high degree of uncertainty, right? And there are so many variables that are kind of moving. What you just want to see is that some of the basics, as I said, are there, right? I mean, which in my case was, in the case of mPokket, was like, are you seeing decent repayment behavior? Are you seeing decent repeat usage? And are you seeing referrals, right? So that we determine was kind of something that, again, as I said, gave us confidence that yes. So there were no specific targets, that it's not like, okay, this much percentage repeat, right? I mean, those are things that you can optimize over time. The basic fact is, are you seeing repeat, right? Is the basic feedback that customer, when you're speaking to a customer, are they appreciating the product, and why, right? I mean, so it's kind of just I think we didn't overthink it, if I were to kind of put it that way, right? Kind of just said, okay, kind of things seem to be moving in the right direction, so let's keep building on this. And that's the general approach that I take even today, right? I mean, uh, don't try to be too scientific about things. You only be as scientific as is required, right? So don't get lost in metrics. Sometimes you lose the big picture otherwise.
which is interesting coming from someone with your background in finance and consulting, that you're able to kind of flip it around and think about it that way. But talking about the landscape itself, right? I know that you got in early, but today it's a much more competitive landscape. What do you think differentiates you from other lenders, and how do you kind of maintain that USP with customers?
So I think one of the things that we have done, and as I said, our roots were trying to serve a customer segment that was very, very unique. I mean, generally, if you spoke to anybody, even at that time, right? I mean, you're trying to start a lending business, nobody would think about giving a loan to a college student, right? Because they would, on in terms of when you think of risk on traditional metrics, they would be kind of the highest risk segment, right? But we decided that that was really a need, and we kind of went after that. So, given those routes, we stuck to serving customers who were really new to credit and who are actually the most difficult to underwrite. So even today, a very large percentage of the customers that we serve are what are called new to credit. Now, new to credit customers are people who do not have a CIBIL score effectively, right? So who will, and they don't have a CIBIL score because they have not had a borrowing history, a formal borrowing history till now, right? So we often tend to be their first formal lender and their first formal interaction with the financial system on the lending side, on the credit side, right? So they've kind of borrowed from friends, family before, etc., but they've never taken a loan from a formal institution. So here it's obviously more difficult to underwrite because you don't have that data and that history, right? As people build data and history, you can look at that and say, okay, this is how they've borrowed, this is how they've repaid, and that's how most loans are underwritten.
So how do you go about underwriting it or assessing risk? I mean, because that's quite a challenge, right? It's a new. I mean, you have no data to make your
No,
decision.
absolutely. So we need to look at data points beyond the bureau score then, right? Because obviously the bureau score is not even there and that history is not there. So we've built a lot of kind of underwriting, expertise and muscle over the years, where by doing this we figured out a lot of what are called alternate data points, right? So you look at online footprint beyond lending, right? So where are people spending their money? And there are alternate ways of getting this data, right? People are online, they're doing purchases, they're transacting. There are other data points about them, about what is their behavior like, what kind of things are they interested in. And there are ways to get this information with the permission of the user, right? So you can ask them to see what other apps they use on their phone. Now this is information that kind of tells you something about the user. And again, you don't make a lending decision purely on that one data point, but data points like these, you collect kind of many of them, and in combination they tell you a lot potentially about that customer. And I'm not suggesting that we would give credit to everybody, right? There are people you would reject as well, based on what we see. But then there are a lot of people who we think are eligible, and we are willing to take that first risk on them. And I think that is what makes us different, and that is also what has helped us build loyalty over time, right? So often when you are the first provider of a service to any customer, I think as long as you maintain a good experience, they tend to stick with you, right? So I think then that customer is yours to lose. So I think what we've seen over the years is a high degree of stickiness, a high degree of repeat usage, where people then subsequently come back to you at a future period in time and again use your service. uh, and I think that is what has made the foundation of our company, right? That's what's allowed us to be different, versus other companies who would focus more on kind of prime borrowers with established histories. And again, that's also a opportunity and that's also a need, but it's just that what we've done is something that's slightly different.
No, it's really interesting, and would love to kind of understand a bit more about how you targeted this specific niche, right? I'm sure education and financial literacy was, a big part of that. Uh, how have you thought about educating your target audience? What are some of the things you've done?
So we've actually, um, you know during the journey of providing credit to these kind of customers, again, because they're not very familiar with credit, I think there's some things that we've focused on right from the very beginning, right? For example, being very transparent about the terms and conditions, right? So that people know what they're getting into. um, so basics like, okay, this is the amount of money you're getting, this is when you're supposed to return it, this is the effective interest rate that you will have to pay. If you do not pay on time, what happens, right? So your financial history gets impacted. If you pay on time, what happens, right? You build a good credit history, how that helps you. So I think again that entire educational journey, one is You just do that as education. The other is you provide it, um, you know, by way of being transparent with your customers during that journey, right? So I think that's something we focused on, and we just tried to keep our product also very simple and not make it complicated, right? So I think that served us well, because I think, the feedback that we've gotten over time is that people like our product because it's very simple. We're not confusing them with like a plethora of options, right? So they're coming to us and maybe there are 50 different combinations and permutations to choose from. We've not taken that approach. We've tried to keep it very simple. Okay, these are the three things you can borrow. These are the three amounts you can borrow. This is how long you can borrow it for. At the end of this period, this is how much you have to repay, right? And if you do not repay on time, then these are the kind of charges that may be levied. This may have, your credit score will get impacted, etc. So just being very transparent about that communication, that helps people make a decision. And then I think another decision that we made, and this is a little more recent, is we are now explicitly building out a lot of basically financial literacy and upskilling content that we are providing to our customers, right? And this is we've actually done this again over the last couple of years because we're using artificial intelligence very heavily here, right? So given the development that's happened in AI and all the models that have been created, we've used that and built a layer on top of it to be able to create educational content through artificial intelligence, right? That we then provide to our customers. So what that means is our cost of providing that content and the time it takes us to create content is very low, because we don't need to have someone sitting and recording a video telling a customer how to do something, right? So we can use AI and effectively create that content in a matter of minutes and put it out there. So
That's an interesting use
yeah,
case
so
for
I
AI.
mean, I
And
think,
I'm sure that
we all talk about how AI is going to change the world. So I think we've tried to start using that, right, and actually put that into action.
nice. Love it. And talking about the other side of it, you spoke about how in your early days people would say that this is a risky area. How have you managed collections? It's something that a lot of fintechs struggle with. Can you walk us through some of the things that have worked for
So
you?
collections is a integral part of any lending business, right? Again, obviously, to at a high level, lending is about giving money and then taking it back, right? So you have to have both legs to make the business actually work, right? Having only one leg does not help, right? So I think that's again something that we built from day one, right? So initially, when the company was starting, effectively it was just me and the couple of other people that we had, who were actually the ones who were calling customers, who were onboarding them. And the first, at least few hundred customers, I literally did everything from doing their KYC to onboarding to helping ensure that the money has gone into their account, to then actually also doing the collections, right? Which meant just calling people and understanding why they are not able to repay the money. So I think a lot of the processes and systems that we have today, the roots I can trace back to those days of just a basic understanding of why a customer would not pay you. Now some of these are intent based, right, where you've given the money to somebody who's chosen to just it's an intent issue. They don't want to pay it back, right? So they always took the money with the intent of not paying it back, but that tends to be a very small minority of customers. Right, for most people it's about understanding why they want to pay. The intent is there, but the ability is a problem at that given point in time, right? So then you need to kind of one understand that and help walk the walk the customer through prioritizing why making a repayment would be in their best interest, right? And one of the examples I gave you is building this history, right? So how do you build a good CIBIL score, which today is so important in so many different aspects of your life, other than just even taking a loan. A lot of employers will also look at your CIBIL score. I read a news article somewhere that I don't know if it was true or not, but it said that groom was rejected because the family checked their CIBIL score and it was too low. So it's not out of the question, right? Because it kind of tells you something about a person. So jokes apart, I mean, just for example, that that is something that you want to communicate to the customer, that hey, you might be a little tight on money, but it will really help you to pay back on time, because it helps. A demonstrated history of timely repayment is something that everyone will look at, right? And when you want to get a bigger size loan, you want to take a car loan, a two-wheeler loan, you want to take a home loan at some point in your life, then these things become very, very important, right? So somebody like, mPokket, one, it allows you to take credit when you really need it. The other is it also helps you build that credit score by demonstrating a good borrowing history at, very low amounts, right? So so that was a value proposition that also we were able to offer our customers, right? People who did not have that credit history and credit score, it allows them an opportunity even today to basically create that score, right? Create that history.
What does the future look like for mPokket? Where are you today in terms of scale, whatever you can share, and what does the next 5 years look like for you?
So today we are, we've grown a lot over the years, and as I mentioned, one, at this point we serve practically every segment that is there uh, in the Indian market in terms of individual, providing individual unsecured personal loans, right? So we're providing loans to salaried individuals, to people, to gig workers, again, who, and these are not, it's not a fixed monthly salary, right? So again, underwriting these people is a bit of a challenge. You need to figure out how much to lend to a person. And then self-employed people as well, right? This is also a very, very large segment in India. People who are running some kind of a small business, who need capital from time to time. Uh, so, so we've kind of given out loans to more than a crore people, right? Which is a reasonably large number. And we've always focused on, again, it's for us, it's not been about size, right? We don't need to necessarily give out loans that are in the lakhs. So our loans start even today at 1,000 rupees, and we give loans up to 50,000 rupees to people, right? So very small ticket sizes, and generally our exposure to an average customer tends to be less than 10,000, right? So that's the size at which we operate, right? So again, it's not about building trying to find customers to whom we can lend very large amounts of money. It's about figuring out who has a need, and whatever their need is, we want to be able to fulfill, even if it's at a couple of thousand rupees. So I think that approach has been fairly unique, and we want to stick to that, because we feel that by doing that we can impact a lot of people and at the same time build a good business, right? I mean, it's always been a objective. It's never been about, this is not a purely social enterprise, but at the same time we want to do business with some motive and objective, right? So, and where we're going with this is, we want to build a platform that, one, obviously is able to serve different credit needs of people. So far we are only providing unsecured personal loans, but we also now are working on meeting other types of credit needs of people, right? So there might be certain assets that people are buying, and it's not always about, I mean, people don't just buy large consumer durables or phones or houses. I mean, that is provided by banks and other large institutions, but there might be other smaller assets that are not easily financed, right? So those are opportunities we're looking at. And so there's various other kind of credit needs that we are working on. Also the small kind of business space, right now, the kind of people we provide credit to who are self-employed, these are basically proprietors. Now what happens when they build like a kind of a more organized business? How do you finance that business? So I think that is another very interesting opportunity that we're working on. So over the years we hope to build some large business in these areas as well. And other than that, I think just being able to build a platform that serves more of the needs of the youth, and these include some the one thing that I was talking about, which is the upskilling part of things, right? Education and upskilling, right? So how do you provide the youth of today an opportunity to become more skilled, so that they are able to earn more income? Because ultimately credit is only a temporary solution. It is money that you have to pay back, right? But if you are able to upskill yourself and get a better job that pays you more money, that is a permanent improvement in your financial well-being, right? So the way we think about our journey is, right now we are helping with temporary access to financial well-being, but we also want to be able to help people to permanently improve their financial well-being, and that is where this upskilling comes in. And then beyond that, we also want to help, once these people are upskilled, also place them in jobs that help them earn this extra income, right? So that entire journey that helps somebody become more financially stable and financially better off. I think that's the goal that we have for mPokket, and that's what we want to achieve over the next 5 to 10 years.
Understand. To conclude, and why we call this Founders Unfiltered, what's one piece of unfiltered feedback you received that really changed the way you look at things personally or professionally?
um so this goes back to the time when I was um, an investor. uh, you know so when you're investing, especially in public markets, right, you're used to thinking about things in terms of percentages, right? So GDP is growing 15%, nominal GDP is 15%, inflation is 6%, real GDP is 7, growth is 7%, corporate earnings are growing at 15-20%. If a company is doing great, it's growing at 30%. um, I went to this one talk at a conference where at that time, Rajan Anandan, who's now at Peak 15 Partners, he was at the head of Google at that time, right? And I think it's very interesting. He made this statement that you should think in terms of multiples, right? Not in terms of percentage growth, but in terms of multiple growth, right? Why think about how whether you can grow 15 or 20% or even 50%? Think about how you can do something 10x or 100x, right? For someone who came with my kind of background and experience, I think that was a big shift in thinking. And I think that over time has become kind of a cornerstone of how I approach things, right? It's about
Very interesting.
building things that can be of very large scale, and not thinking incrementally, right? So even today, when I think about where I want to go next, let's say, what do we want to do next year versus this year? It's not about can you grow 15-20%. It's can I grow this 5x, can I grow this 10x,
Hmm.
right? And it may not be the entire company, but it may be a part within the company, right? Can this
Right.
thing grow 100x over the next 5 years,
Right.
right? And I think that then makes you think very differently, because achieving 10x or 100x, what you need to do to achieve that is very different from achieving doubling even, right? So I
Got
think
it.
that is where new areas of business and really kind of pushing the envelope, thinking of something out of the box, I mean, all of that becomes critical. So I think that gives a different perspective.
Awesome. Now, that's a very nice way to close our conversation. Thank you, Gaurav, for your time. Really enjoyed learning about your journey and how you've shifted through multiple things and got to this. And I think that mindset shift on thinking is a good one. I think that's a good thought. So thank you so much, Gaurav, for your
Thank
time.
you. Thank you, Aviral. It's been a pleasure. Thank you, Mazin.